Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. A big reversal on Monday after the buildup leading into the weekend with the weather risks, with geopolitical risks on the rise, even some Fed and economic risks thrown in there. Gold touched as high as $13.62 and was down about $20 on Monday, which isn't all that unheard of after a big build-up, after risk starts to really take center stage. And a lot of it is uncertainty. And I think that the pullback we saw really was nowhere even close to first support, which comes in around 13.25 because of the fact that we went up so fast. A lot of the support levels that we typically have, whether it be every $8 or $10, just isn't there. We didn't spend any time there. So if we got to go back to the July to September range, which takes you from about 12.20 up to 13.62. That's kind of where we are, and 13.25 was sort of the one of the retracement levels we were watching. The next one below that's going to be around 13.05. So again, we are nearing support. We didn't go through it, which means we're still in sort of a bullish channel here. However, gold is very emotional and does make big moves and does make them very fast. So as we saw today, down $20. Now, what did the dollar index do? The dollar index itself was higher. Again, a reaction from the non-event weekend, or certainly the non-catastrophic weekend that we saw, as far as from North Korea, as far as from the storms in Irma weren't as bad as expected, and things just kind of retraced a little bit. So a stronger dollar also helping to push gold lower. And what does that mean we have ahead? Well, this week we have inflation data coming out later this week, and then we have obviously we're going to be all eyes focused on the Fed the following week, and Fed expectations have been sort of up in the air, and this is very rare. Typically the market will price in expectations of what the Fed's going to do, and it pretty much holds solid to it. We've been below 50% for quite some time. The Fed is going to raise rates again in 2017. We were as low as 25% last week, so it's certainly back above 30 and change today. But I think right now the market's leaning towards no-go for 17. However, it's going to all contend on what happens at the September FOMC. Will they lean towards going? Will they lean towards not going? How will gold react? Gold obviously is a beneficiary of the zero interest rate environment. It has been ever since the Fed took rates to zero back in 2008 and 2009. So right now we are seeing gold kind of elevated but off its highs. We'll have to wait and see what happens in the next week and a half to 2 weeks. That will be telling for gold and as far as the longevity of this rally, but it still is certainly in place. So right now gold still bullish despite a huge pullback after the weekend risks were taken off the table. This is Todd Colvin coming to you from the floor of the CME Group.